Hello guys, welcome to another Bitcoin tutorial. And today I want to give you a very brief overview about how to trade Bitcoins. Now, if you've never traded Bitcoins and you're kind of starting to look into information about how to trade Bitcoins, this is probably the video for you. I try to keep it short, simple, and give you the basic overview that you'll need in order to get into this world. So let's start with a bit of a trading overview. The basic idea of Bitcoin trading, or of every trading, is that you buy low and you sell high. And that sounds pretty simple, but we'll see in a second why it gets a bit more complicated. Now, what is a Bitcoin exchange? A Bitcoin exchange, or any other exchange, is a platform where people who want to buy Bitcoins and sell Bitcoins meet. And if I, for example, want to buy Bitcoins, I go on this exchange and I say, hey, I want to buy Bitcoins for $400. And another guy who wants to sell Bitcoins for $400, if he puts up in order to sell Bitcoins for $400, the exchange matches our orders and creates a transaction. So it kind of makes the lives easier for the buyers and the sellers. And in exchange, it takes some sort of a fee, a transaction fee. So that's the basic idea of an exchange. But the thing that most people don't get is the difference between executable and non-executable transactions. And I want to talk a bit about this. Executable transactions are exchanges where when you put an order to buy Bitcoins, you get the actual Bitcoins into your Bitcoin wallet. Meaning if I say I want to buy one Bitcoin with $400 and I pay those $400, I will get that Bitcoin in return, the actual Bitcoin. Non-executable exchanges are places where you don't actually transfer the commodity or the currency. So, and these are what you call the forex companies. So if I'll trade on a non-executable exchange and I'll say I want to buy a Bitcoin for $400, I won't get that Bitcoin. I will only get the profits or the losses that I incurred through trading in that currency. So if, let's say, I bought it at $400 and I'll sell it at $420, I'll only get $20 into my account. I won't get $20 worth of Bitcoins into my account. I won't be able to actually keep the money. So I hope this difference is it's now a bit more clear now once we talked about this difference. And we'll see later on how it kind of spreads out throughout the different exchanges. So a bit of terminology. There's the bid price or the buy price, which is the price that people are currently you'll have to pay in order to buy Bitcoins. There's the sell or ask price, which is the price that you currently get for selling Bitcoins. And there's what is called the spread. The spread is basically the difference between the bid and the buy, and I'll give you a short example about it. So let's say the buy price is $390, and the sell price for Bitcoin, meaning how much you can sell a Bitcoin, is $387. This means that the spread is $3. So now to kind of elaborate on what I said before, you don't only need to buy low and sell high, you need to buy low, then beat the spread and sell high. And what I mean is, let's say I bought Bitcoins for $390. I will now need to wait until the spread is down to zero, meaning the sell price will go up to $390. And only from this point on, once I sell over the price that I bought, will I make a profit. Well, in a second, I'll give you also a real live example so you'll see exactly how it's done in the different trading exchanges. Okay, so now for a short example about what we talked about. I'm currently using a web trading platform of one of the non-executable exchanges, what I'll talk about a bit later, just because it's easier to demonstrate on it. This one is AvaTrade, and this is a really simplified web view of how to trade. Most people won't use this simplified web view. They'll have much more screens. There's a lot of things that I'm not going to go over in this tutorial, which you can keep on learning and to know how to trade more effectively. But for the sake of example, we'll use this view. And here you can see the Bitcoin buy rate, which is $425.24, and the sell rate. And you can see that the spread between them is something around $3.5 more or less. So let's say I want to buy Bitcoins right now. Now, when I click buy, I buy an amount which is equal to what is written here. You see here it's written 0.01 lot. Lot is kind of the equivalent of 1,000 units. So I'll buy basically $10 worth of Bitcoins. The non-executable trade platforms give you a form of leverage. You can leverage your money if you want. So you see I can buy, even if I don't have this money, I can buy different amounts of Bitcoins all the way up to $1,000 per my dollar in my account. But I'm not going to go over this in this tutorial. I'm just going to, for sake of example, now buy $10 worth of Bitcoin. So click on buy. And by the way, I clicked on buy because I assume that the Bitcoin is going to go up and not going to go down. as you can see from the graph here in the last 4 hours. It's on an upward trend. So now I have my open order here, the buy order, and this is the amount I bought, and this is the open rate I bought, and now you can see here is the profit. Now why am I in a losing profit? Because like we talked before, this is more or less the spread. This is how much I bought it for, this is how much I can sell it for, and as this changes, the profit will change. You see it's changing right now. Now the profit has gone down, it's going a bit up, depends on micro changes in the Bitcoin exchange rate. So this means that basically only once I complete this gap of $4.5 will I be able to sell again or close this order here and make a profit. Now, two more things I want to elaborate about. I want to edit this this position for a second. You can see here something S/L and T/P. These are what's called stop loss and take profit. These are kind of reference points to minimize or maximize your gains and losses. The stop loss is used at a buying position in order to minimize your losses by saying, hey, if for example the sell price now drops below, let's say 419, then close this order. I don't want to lose any more money. So let's put a stop loss here and tell it to sit at 419, for example. And we'll update this. Okay, sorry, there was a bit of a problem there. And you see now I've got a stop loss here of 419. But also I want to say, hey, let's say the sell rate goes up ballistically to 430. So I want to take that profit at that point, and I don't want to be needing to be sitting at that computer and kind of waiting for this position to close. So I can put a take profit at $430. One second. And now you see I have a stop loss at 419 and I take profit 430. And if this, for example, now goes down to 419, this position will automatically close. If it goes up to 430, this will automatically close also, giving me the profit. Now, of course, you want to do lower increments than this, especially if you're leveraging your money and you're not here. You see, it went down for a second for 417 and it's now a closed position. It's not this one, this is an older position. Let me see for a second. Okay, here it is. I bought for 425 and it closed at 419 automatically, and I lost $6.24. So this was a kind of a bad example of how to trade, but it's only for the sake of example. So now that we saw the real life example, a bit of options that you have for trading. First of all, the non-executable trading platforms. So these are better for short-term trading. If you're a day trader, that'd probably be better for you. And that's basically because they have easier depositing methods. You can deposit with PayPal or with credit card, which is a thing that you can't do in executable exchanges. Also, you have no fees. These exchanges kind of live off the spread, meaning they don't always execute the transaction that you tell them to. They have their own methods of doing their risk calculations. But if you, for example, buy some Bitcoins and then it goes below the price you thought it will go and you close that order, so they kind of profit only on the spread, on the difference between what you bought it and what they could have sold it. So they take no fees, and that's kind of good for the trader because he pays less transaction fees. Also, they usually have demo accounts options, so you can kind of practice before you go to real life trading. I kind of wholeheartedly recommend that, even if you're not going to use the non-executable trading platforms. Open a demo account and kind of try to get the feel of what it is to trade. Get the idea of how to analyze graphs. They also have kind of a lot of training tutorials. If you want to go to the executable trading platforms, then that's better for the long term. If you believe that the Bitcoin is going to soar to $1,000, maybe someone watching this movie in a year and a half from now is going to laugh at me because the Bitcoin is, I don't know, $10,000, or maybe it's dropped to zero. But today, according to today, it's around $400. It just broke the $400 barrier today. So if you think for the long term, the Bitcoin the price is going to go up, then it's better to kind of keep the currency in your own wallet and use an executable trading platform. The problem with these executable trading platforms is that it's hard to deposit money into them. Most of them accept only money orders, wire transfers, or several different payment options, but they don't accept credit cards and they don't accept PayPal because of fraud probability. And I talk about this a bit more on my website. You can look it up and find out why. Also, they have trading fees. So each time you create a transaction, you have to pay some sort of fee. It varies between each exchange, but it's something you need to take into account. And there's no demo accounts. That's why I said it's better even if you're not going to use a non-executable exchange to open a demo account in one of them so you can kind of get to practice. And then if you want, you can move over to the executable exchange. A bit of the trading platforms that are available out there. So non-executable, currently today, there is AvaTrade, Plus 500, and forex. The links are down at the bottom of the description if you want to check out the websites. These are the only forex companies that currently allow Bitcoin trading. Hopefully in the future there will be more, but these are what are relevant for now. If you want executable exchanges, then the most popular is probably Mt. Gox, although it's been reported to have some issues in withdrawing the money, so I wouldn't necessarily start with that platform. I used to trade on Mt. Gox. I currently withdrew all my funds out of there. BTC China is kind of a growing exchange since China is now heavily into Bitcoin, and BTCE, which is also kind of a well-established exchange. Whatever exchange you go to, make sure to kind of do your due diligence about that company and see that it's a legitimate exchange. There's been a lot of talk about exchanges closing and stealing their customers' money, so you need to see that this is a legitimate business. Kind of ask around, maybe see if it's better to exchange at this exchange or in another exchange. So I hope this overview gave you kind of a head start in starting to trading Bitcoins, and that it kind of I don't know, arrange stuff correctly in your head now that you're going to try to start and trade. So I wish you the best of luck, and thank you for watching this video, and hopefully we'll meet again in another tutorial soon.